and I want to discuss a few trades and analyze a few things in the markets that happened yesterday after the market closed. Okay, the first thing that I want to discuss is what happened after the GOP meeting, because they didn't reach an agreement. The Democrats and Republicans, they couldn't agree, and they actually pretty much stitched it, and they went on vacation. Okay, the markets didn't like that, and they went off about 40 points in the aftermarket hours. Okay, from the 1450 level to the 1391. The good news is that it jumped back up about 50 more for about 25 points upward in the future markets, and it's still stabilizing below this level, so it's something that you have to monitor. Now the thing about the GOP meeting, remember what happened in the summer. They already made an agreement, so if they don't reach an agreement by the next few weeks, I forgot, they might extend it, but if they don't reach an agreement, the cuts will come automatically. So I don't see this as a big impact in the markets, because it's gonna happen in either situation. Okay, we gotta reduce the fiscal debt that we have. Okay, now a lot of people have a lot of negative sentiment with this. Okay, they want to short the markets, they think the markets are overrated, blah blah. Okay, but don't get overhyped, don't short it just yet. Just always remember to wait for confirmation. Okay, always wait for confirmation. We are in a bull market trend. Okay, we're making higher highs, lower highs, higher lows. Okay, it's simply saying that we're going up more than we're going down. Okay, so every single time we are going into the next wave, we have a 6-point move. Okay, so we measure from the 148 level to 6-point move, we have about a 153 to 154 level that we're looking at. Okay, you can short the markets if we can close below the 1368 level in the future markets. Okay, 1368 levels, or we can look at the SPY, because I know a lot of you don't have the future markets themselves, the future charts themselves, so you're looking at the 136 level. Okay, below the 136 level. Okay, that's for confirmation. Again, the only reason that I'm still bullish on the markets, because the dollar itself and the euro, it's showing me that the market still has a little bit more to go. Okay, now remember, in order to know what happens with the markets, you have to analyze the dollar. The dollar is the most important indicator that you ever use to monitor the markets. The higher the dollar, the lower the markets. The lower the dollar, the higher the markets. Okay, why this pattern trend works is simply because the higher the dollar, lowers expectations. Lower the dollar, higher expectations. Okay, so pretty much other markets can buy our products for a cheaper price, making their products more competitive with the other competitors. Okay, in the long run, this is not profitable, but this is how the markets work. Okay, now the dollar, again, we are in an inflationary rally, so the dollar is weak. Okay, although we are reaching double bottom at the 21.57 level, so we have to monitor that level very closely, because it won't break in the first bounce. It will break probably in the second bounce. So I do expect a small market correction from the markets themselves, but the overall market is still strong. Okay, one more thing before we move into the euro. We have head and shoulders pattern here. Okay, so keep that in mind. We have a left shoulder, the head, and the right shoulder, and we broke it. Okay, and we have the gap reversal, which signifies it's a very weak market, and we're making lower lows, higher lows. Okay, so keep that in mind. Now, the one chart that I want to discuss is the euro. Okay, we are gonna look at the 1-hour chart. Now, the overall trend in the market, we have a bullish trend in the euro. Okay, we're making lower lows, higher highs, higher lows. Okay, now we do have a trend reversal. Okay, in this part here, because we're making higher highs, higher lows, lower highs, and lower lows. Remember, we broke this support level here. Although we are still in a bull trend in the euro. We just keep in mind we did break in the bottom in here, so just be careful what happens in the next few days. Okay. Now again, don't short it unless you're sure of it. Okay, don't short it unless you're short of it. So always wait for confirmation. Confirmation, it's gonna be on the 131.29 level. We can confirm this on a closing basis. Short the markets, short the euro, and you can short the markets. Remember the correlation between the euro pair and the markets. Okay, the stronger the dollar, the weaker the euro. Stronger the dollar, the weaker the euro, the weaker the markets. Always remember that pattern. Okay. Now, also, we're gonna look at the IWM, the Russell 2000. Remember how equity flows. Remember how equity flows. It flows from the bigger markets to the smaller it flows from the smaller markets to the bigger markets. Okay, the Russell 2000 are the top 200 companies, so there are a lot of weak companies in there, so just keep that in mind. Okay, now we look very bullish, extremely bullish on this one here, because we have a smaller, acuter angle in the IWM, in the Russell 2000, so it looks very, very strong. If we can break the 86 level, would mean a significant change on the S&P 500 top 500 companies, and we can see another wave to the 154 level. Okay, now I want to discuss a few stocks that I mostly trade. Okay, the first thing that I want to discuss is Apple, everybody's favorite. Okay, now Apple fundamentally is an extremely strong stock. Using a PE evaluation ratio, analysis ratio, you can see that it's about 15% undervalued from the overall markets and from the blue chip companies. Okay, so I did a few pointers that I will point out in later videos, that this stock should be valued about 736, 740. Okay, fundamentally speaking, this Apple's really strong, but technically speaking, it's extremely weak. Okay, now I went bullish on the 525 level earlier this year. The reason, because we had a bottoming tail. Okay, we had a nice little bottoming tail, and we bounced back, and we bounced on high volume. Okay, as you can see here, we bounced on high volume. Now, once we bounced back, it completely reversed back again. It couldn't even reach the half of the wave. So this makes it a bear flag. Okay, a bear flag means that we're looking for the next wave down. Okay, so this is a bear flag, consolidation, another wave down. So it would be wave 1, wave 2, wave 3. Okay, or A, B, C, and looking at the, okay, always remember 3 and 5, the 3 and 5 waves. Now, looking at a little closer look, we are making lower. We actually made a lower low than the previous low. So be careful with this stock. Okay, I love the stock, love the company themselves, but technically speaking, it's not a right entry. And you can short Apple because fundamentally speaking, it's extremely strong. So it's not a wise option to short the stock. There are better options out there. The next stock that I want to discuss, and I thank Dave Johnson for this, because he actually recommended me the stock and how it actually leads the markets, and he is very right. He's correct, because IBM is a semiconductor company. Now, semiconductors are crucial because it's hard to get into the business themselves. It costs millions of dollars for an entry, so it's a hard entry. Sorry for that. So it's hard to enter those types of markets. So it's crucial to monitor the semiconductors. Looking into a wider spectrum, IBM is a multinational company. So remember, it's all over the world, from China, from the United States to Germany to China. IBM's everywhere. Okay, so it measures the global GDP. Okay, not necessarily accurate, but I use it as an indicator to measure the GDP growth itself. Okay. Now we are in a bull trend. Just notice that we're making, again, you have a nice little trend pattern here. Now what happened after earnings? They disappointed about earnings. We had a huge gap down. Okay, we made a stop here. You had a nice A, B, C correction, and we're moving up again, steadily growth. It's nothing to panic. We are looking at a positive feeling from IBM. As long as we can stay above the 186 level, we should be good. Okay. Now the final stock that I want to analyze is going to be Facebook. Now Facebook for me is going to be worth, I have the most high sentiment for Facebook, because the thing is that the way they utilize marketing strategy and the online marketing, it's genius. And you can compare MySpace, you can compare any social stock with Facebook's marketing strategy and stuff they get, that they help people, they help marketers, they help advertisers utilize this tool. Okay, so it's very bullish in my perspective. Again, it's always speculation until it really happens. Okay, but looking at technically, we can see a nice bull flag confirmation. Okay, and we can look at the once we can see a nice high volume rise here, which won't happen until until February and March. Okay, because usually holiday volume is very low, so keep that in mind. We can see a trend back to the 45 level. Okay. So for now, this is all I want to discuss. Okay. Just before I go, I just want to discuss Nokia. I gave this entry a few weeks ago, and I think it's time to exit. Okay. It's time to exit. If you have it, great. You made money, awesome. But we have finally reached gap filled. Okay. I'm sorry, gap window, gap filled. We finally reached gap window. It should sell off in the next. It should sell off in the next few days. We'll see what happens. If we can close above the 430 level, I would suggest to buy it. It's easy money to the 502 level. Okay, but for now, take your profits and go out. Okay. That's all I want to discuss for today. Thank you for your time, and I'll see you guys around.